Welcome back to my channel. If you are new here, please subscribe. I will be going over some of the key points in the Texas Adjuster's exam. Please be advised that this is just for entertainment purposes. I suggest that you enroll in a course to help you pass the exam. You will need to know many definitions and laws. Chapter 1. Insurance Regulations. Who is an agent? An agent is anyone who talks to someone else regarding an insurance policy. The Texas Department of Insurance defines an agent as anyone who performs the following tasks: solicits insurance, takes or transmits an application for insurance, receives or delivers a policy, examines or inspects a risk, collects or transmits any premium for insurance, adjusts a claim on behalf of an insurance company. Anyone who performs any of these tasks must hold a license issued by the Texas Department of Insurance. Anyone acting as an agent without a license is subject to fines up to $1,000. Types of licenses: property and casualty agent, managing general agent, risk manager, surplus lines, adjuster. To qualify for any of these licenses, you must be at least 18 years of age, a resident of Texas, and pass a state exam. General lines or personal lines, property casualty agents. A property and casualty agent is authorized to write, sign, execute, and deliver policies. All policies must be signed by a resident PCA. In order for a PCA license to be active, the PCA must have an appointment by an insurance company. In turn, the PCA can then appoint other licensed individuals, PCAs, to bind policies for them. A PCA must complete 24 hours of continuing education every 2 years, with a late fee of $25 being charged to renew the license. If not renewed on time but expired within 1 year, you must pay a $50 application fee, $25 late fee, redo fingerprints, and complete any continuing education required with up to $500 fine. If over 1 year expiration, licensee must retest. There are 3 types of PCAs. An individual PCA solicits business directly from the public and must be sponsored by an insurance company. A PCA partnership must license the company and one partner. All employees actively selling insurance must be licensed. A PCA must be issued to a corporation if it is organized under Texas law and located in Texas. Only one officer or director must be licensed as a PCA. Anyone actively selling insurance must be licensed. Shareholders do not have to be licensed. PCAs must demonstrate financial responsibility by holding an errors and omissions policy of $250,000 or a bond of $25,000. There are 2 situations where a person may take actions requiring a PCA license without having one. Survivors, temporary license. Upon the death of a PCA, the surviving spouse and children may continue to share in the profits of the agency, receive commissions, without obtaining a license. They cannot write new business, but the law recognizes their right to the continued income. Emergency PCA license. In the event of the death or disability of a property and casualty agent, the TDI may issue an emergency PCA for a period of 6 months to an individual who will conduct the business of the agency. Non-resident agent. A non-resident agent can write business in Texas if it is countersigned by a resident PCA. A non-resident agent must be licensed in their home state in order to receive a non-resident license for Texas. No exam is required, only an application and appropriate fees. Managing general agent. A managing general agent (MGA) is a person or corporation with supervisory responsibility for an agency. An MGA may perform the following acts for a company: receive and pass on daily reports, receive and be responsible for agency balances, and appoint PCAs. MGAs do not deal with the insuring public and may not sign or execute policies. In addition to all licensing requirements, 18 years old, resident of TX, pass exam, and MGA must have errors and omissions policy for $250,000 or a bond for $25,000. This license has a 2-year renewal. Surplus lines. In order for a surplus lines agent to be appointed by a surplus company, they must hold a surplus license. To apply for a surplus license, you must already hold a MGA, a PCA, or both. Risk manager. A risk manager evaluates risks for another person or company and advises them on how to reduce their losses and exposures to risk. A risk manager is not an agent and cannot collect commission. He/she can collect a fee for his/her services as long as this is disclosed prior to the services being performed. Risk managers must be licensed. This license has a 2-year renewal. Limited lines license, banks and rental car agencies. Banks may offer insurance products but must be licensed to sell them. Rental car agencies also sell insurance for their automobiles, and their employees must also be licensed to perform this activity. Adjuster. An adjuster must be licensed to adjust claims. An adjuster must complete 24 hours of continuing education every 2 years. This license has a 2-year renewal fee of $50. A 90-day grace period may apply for renewal, with a late fee of $25 being charged to renew license. If not renewed on time but expired within 1 year, you must pay a $50 application fee, a $25 late fee, redo fingerprints, and complete any continuing education required with up to $500 fine. If over 1 year expiration, licensee must retest. Continuing education. There is an exemption for continuing education for agents who have held a license in good standing for 20 consecutive years. All agents must complete 2 hours of ethics or consumer protection. All licensed agents are required to complete 24 hours of continuing education every 2 years on the last day of their birth month, with at least 12 in the classroom. Any criminal or disciplinary actions, financial or licensing, must be reported within 30 days of any change and then again within 30 days of the outcome. Report change of address. Anyone who holds a license must immediately report a change of address to the TDI. Fair Credit Reporting Act. This law, created by Congress, is in place to protect the consumer's right to privacy. If a consumer is denied credit, insurance, or employment as a result of information in a credit report, the consumer must be informed. The consumer must be given the name and address of the reporting agency, Equifax, Experian. The consumer then has the right to obtain a copy of the report so that they may refuse any information they feel is incorrect. Disciplinary actions. The surrender of a license to the TDI will not negate any offense prior to the effective date of the license surrender. This means that an agent cannot commit illegal acts while holding an active license and not be held accountable for those acts simply because they surrendered their license or no longer works in the insurance business. Suspension. Revocation. An agent must have a valid appointment either from a company, PCA, or from a PCA, ISR, for license to be in force. The TDI may deny, suspend, or revoke a license or certificate of authority for any of the following: willful violation, misrepresentation, conversion of money, found guilty of fraudulent or dishonest acts, twisting, conviction of a felony, rebating, writing fire insurance in excess of property value. This is a lot of information, so I will be breaking it up into 2 parts. Topics that will be discussed in Part 2 of Chapter 1. Penalties. State regulations. Company regulations. Unfair claims settlement. Unfair trade practices and defective trade practices. Texas Property and Casualty Guarantee Association. Insurance Guarantee Funds. Joint advertising. Thank you for watching, and please subscribe if you have not already done so.